Hi, welcome to this sphere. Day 16th of November is Saturday. We're just going to be looking at trend following big trades. Basically, looking at the bigger picture and looking to catch moves of 1,000 pips or more. Now, in relation to trade setups, I'm going to go through one of our favourites for catching and holding long-term trends. It's GBP CAD, which has been a particular favourite of ours over the last few months, as regular viewers will know. Now, GBP has moved up nicely on the CAD. It's moved up around 900 pips since we first got interested in it. We haven't got all of that. We've done 3 trades in the pair and we've got around 750, so a good chunk of the rise. But how much more upside is there to come? I think there's another 1,000 to 2,000 pips. Now, in relation to this trade setup, why we like it so much is because it's got relatively low risk against the reward potential. Now, in terms of the trade setup, it's very much based around looking at the longer term picture and keeping in mind a phrase which is a margin of safety. Now, a margin of safety, the phrase comes from Benjamin Graham, who wrote the classic book, The Intelligent Investor. I'll go through why it's so important in terms of long-term trend following when we get to the chart. We always keep it in mind if we're after long-term position trades. Now, what we will do is we'll go and take a look at the trade setup. But please do keep in mind, it is, of course, my view as of this specific moment in time. It can change in line with the market action and conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs, including our exact entries, stops and targets, you can get live access to our member center on the link beneath this video. Now, just before we take a look at the daily chart and draw levels of entry, stop and target, I just want to take a look at the longer term monthly chart to get the big picture. Right, let's go take a look at the trade setup.
Monthly chart, just very quickly before we go to the daily chart. I just want to see the big picture here, and also you can see my target, which you can't see from the daily chart. Now, I've done plenty of videos on this pair. It's been one of our favorites for the last few months, and the reason we've been so interested in it was when we came into this 160 level. Okay, we thought the level would hold. Now you can see we tumbled to 160 there, bounced slightly through the level, bounced slightly through the level, bounced slightly through the level. We'll come in on strength buy, and we move up quite nicely with 3 kind of higher lows. And then this month, let me just get rid of that line, we're just pausing. Okay, and I think we're getting ready to break higher, and there's a level there. That's 171. Okay, those 2 bodies, the top of that candle and the top of this candle. Okay, nice move up from 160 to above 170, but the pound has got more strength for us to come. And the pound weakness, since UK voted out of the EU, it's just all to do with Brexit. Now, the chances of a hard Brexit have obviously receded. There's not going to be a hard Brexit. So our view is the pound, longer term, should retrace the whole Brexit decline. Okay, so basically all the way up to 190. There's a level in between. Obviously things can change, but the way we see it, pound 180, then possibly a run on to 190. Now, in terms of the daily chart, we're going and take a look at that. I also want to go through a margin of safety. Then we'll draw exact levels of entry, stop and target as well. So let's shift over to the daily chart. Right, GBP CAD daily. I'll just discuss the sentiment towards this pair in a moment and draw our levels of entry and stop. You already know where our targets are. Now, in terms, just before I do so, I just want to talk about in terms of if you're trading market reversals or if you're trading a big trend in motion, you want to keep in mind what margin of safety you need. That means how much you need to risk to stop against your potential reward, and if there is a gap in terms of is price below fair value. Okay, in this case we think it's way below fair value. Okay, so you need to know or judge gaps between price and value, keep in mind, your stop against your reward potential. Now, just very briefly, I just want to go through the thoughts of two legendary investors. They're Benjamin Graham, who I mentioned in my intro, and you hear about the book The Intelligent Investor. He noted your aim is to buy at a level which is substantially less than its value, so the margin of safety is small and helps you hopefully to absorb miscalculations or worse than average luck. Now, in terms of that, just means that you're looking really to trade against the majority. Okay, so where you can have your stop relatively close against your reward potential. Now, just to make this a little bit clearer, Seth Klarman said, this is a great quote: investing is at its core the marriage of contrarian streak and a calculator. To win, you need to focus on gaps in value and price. Down at the 160 level, we saw it on the monthly chart. It did overshoot a little bit, came back, and that's moved a long way from 160. We did try quite heavy long trade off the 160 level, and then bash, got stopped out. I did a video on this on YouTube. I actually said to you, I've got a heavy position in, got stopped out. I feel a little bit, oh, did that really happen? But at the end of the day, it's just a small loss. And a lot of people write to you and say, oh, you don't know what you're doing. But the loss is so small, you'll get another bite of the cherry. And we got it through there. And then we were off the upside, done 3 trades in the pair. Profits way more than that loss that we took, which I just noted. Now, in terms of, if you want to be a successful Forex trader, you've got to be contrary to the majority view at the right time. Okay, this is in terms of trading reversals, and even if you're trend following, okay, to be contrary at the right time, you must be able to measure gaps in value and price. Now, in terms of this, most traders, don't like being really contrary against really bullish or bearish sentiment extremes, and they don't know how to value gaps in value and price. Well, the COT Net Traders positions will help you, and I'll come to them in a moment. In terms of trading reversals, you always get low risk against very high rewards, like down here. Okay, it doesn't matter if you get trade wrong or even two. You have another go. If you're after big trends, you will hopefully get a big move like we've just seen, but we think there's more upside to come. But even when you're trend trading, you need to keep in mind gap in value and price. So pound's moved up quite nicely. Is the pound still undervalued? Well, the answer is yes, in our view, as you saw when we looked at the monthly chart. And if you wanted to come in fresh to this trade, I think it looks really good on a breakout. There is still a gap in terms of value in pricing. You can see it from COT Net Traders positions. If you're unfamiliar with the tool, there's a full video on our channel that goes into it in depth, called COT Net Traders Indicator. But here, just go through briefly how we use it. And in terms of how we use it, 2 groups: speculators and commercials. Commercials are smart money. Okay, we want to see them oppose speculators, and it'll give us an idea of where we can place our stop and how much reward potential there could be as well. We can see speculators very bearish, 4.1 to 1. Sorry, 4.1 to 1 in terms of their short positions over their long positions. It's despite the pound's move up. Commercials 3.1 to 1 in terms of longs over shorts, so pretty bullish. Divergence between 2 groups 7.1. Historically, that's a nice divergence, and we think should see more upside. Now, in terms of the Canadian dollar, one general point I'm going to make is in recent weeks, the commercials have built up I put equals 2-year short position. It should be a plus 2-year net short position in the CAD. They sold the CAD against all other majors. We know the pound is undervalued. The commercial selling just across the board in the CAD points to the CAD just being overvalued everywhere. It's in our view the most overvalued major currency. So pointing to continuation. Now, in terms of continuation, no surprises where the level is going to be. It's going to be, sorry, I just need to line that up better. There we go. Basically, these candles here, they're all in the 170, or the tops of them, or the 170, 93 to 95 area. Okay, so just below 171. Okay, the round number, very important. And if the round number gives way, I'm going to say 171.30, get rid of the turbulence you always get around round numbers, we should get continuation. So we cut nice and strong here, reject, couple of pokes, reject, build up slowly, 2 pokes, small candles, lowish volatility, points to a big move. We think the break is going to be to the upside. Of course, you can take it on a dip if you wish, but I'm just going to look at it here from a breakout perspective. Just draw a trajectory in which will go there. And in terms of a straight line there, double trend line kind of support, first level, second level. This straight line is drawn because you see how we rest on level, go beneath it, and then punch back on that big blue. Now we're coming up. So above the 171 level, and I think the stop 168.70, and see if she runs. I'm hoping, obviously, it does. We shall see. But yeah, if you're new to the COT Net Trader Solutions or haven't heard of them, look them up. They will help you find, if there is a gap in value against price, and also, you can have a relatively tight stop against your reward potential. Your risk reward ratio will be really good. Your margin of safety is very good against, hopefully, your potential profit. See how it goes. But that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.